What's up, family? It is Caden with Urban Finance. I am excited for our conversation today. I have on with me Oliver Brown, owner and founder of Brown Tax Preparation and Financial Services, and he will come on with us a little to discuss taxes and anything relating to taxes. And so I am very excited about this conversation in this tax season as we see things, changes in tax laws that can and will be implemented. And so if you're out there watching right now, say what's up in the comment section. And if you have any questions at all for Oliver, certainly let us know in the comment section. I think that's going to be a very, very important part of this dialogue. And so, I think Oliver may have got disconnected. So we'll give him some time to come in as folks get on to the live. If you're signing on to the live, make sure you say what's up, say what's up, say what's up. And let's see, Oliver, can you hear me good? Awesome, awesome. Awesome. And so looks like we're having some technical difficulties on the live right now. I don't think I can hear you, Oliver.
On mute. I couldn't hear you before. Now I can.
Awesome, awesome. So glad that you can glad that you can hear me now. And
Yeah.
so, are you able to tell the folks a little bit about yourself?
Sure, absolutely. As you're very well aware, we're in the heart of income tax season, and I got a call for a client on a project that needs to be done for their taxes, and I've made sure I made myself available so I could be here to serve and provide the information, Caden. So thank you for giving me the opportunity to come back again and grace your YouTube channel and support Urban Finance. My name is Oliver Brown, and I'm the founder and CEO of Brown Tax Preparation and Financial Services LLC. And I'm an accountant by trade. That's my profession. I've been in the industry for 25 years, served for about 22, 23 years as a high-level corporate accountant, and been an independent entrepreneur since the age of 17, actually going into my 17th, 18th birthday. So my registered entity is in the state of Florida, and I've been in practice independently, actually, as far as doing solely focused on my business since the transition started to take effect in 2018, and where I stepped away from the corporate environment, and now I'm focused solely on building my accounting practice. And individual services that we offer include accounting, bookkeeping, payroll, taxation, and from a spectrum of the tax book of business, we do personal taxes, business, estates, trusts, and we also handle foreign and international tax clients as well. Now, under the umbrella of financial services, we do credit repair, bankruptcy filing assistance, investment training, and financial advisory and planning, tax planning. I also offer public speaking, services as far as engagements and doing mentorship and a whole host of other things. So all of that, all under the framework of my business. And for me, to speak more personally to myself, I'm an immigrant that came here to this country from the island of Jamaica. My mom was the first line that came over across to the U.S. and brought myself and my younger brother. I was raised in my teenage years and my early adult years in the borough of Brooklyn. So I'm a native New Yorker in that respects, and I since migrated with my family to the South Florida region. So, I attained my education, a high level quality of work experience, and worked for many firms at a high level, multi-billion-dollar firms, and attained a lot of knowledge over that period that I'm now giving and passing it along by way of my business and just simply my efforts through connecting with our people in the community. So that will be the full spectrum of what I bring to the table. So there you go, Caden. Oh, Caden, did we lose Caden? All right, well, I'm taking over the show then. There's been a technical issue, I believe, on the platform. So while Caden comes back, I'm the host.
There you go. Thanks for hosting for me. I appreciate it. I was just about to say you're a true yardie. Listing all of the things that you do, the great depth of experience and type of work that you do. So I know that you're going to be a blessing to everyone that's on the platform. Shout out and what's up to Florin Cummins Young, who is with us as well. As you join, feel free to say hi in the comment section. And like I say, if you have any questions, definitely let us know. And so I'll start off with a personal question,
Sure.
and you can make it into a general response. So I've been getting a monthly child tax credit. And
Yes.
so I'm wondering, how does that tax credit affect my taxes when I actually apply, especially as it relates to getting deductions for having a child and things of that nature?
All right. Now, of course, we've been dealing with a 2 year long consistent pandemic by way of COVID-19 and the things that have come with, the ever changing world that we're in. And one of the many efforts by way of the government to try to help households, get some level of relief, and certainly in the business community, providing platformed loans and grants and funding that will hopefully keep businesses in operation. Now, for speaking directly to the credit, which you're referring to, the child tax credit, under the American Rescue Plan of 2021, the government has decided to start issuing advance payments, and for purposes of your taxes in prior years, pre COVID-19, the child tax credit, long as you meet the eligibility requirements, having the dependents and meeting the income layers as far as the thresholds to be able to receive the calculated credit, you would normally file your income taxes and receive the benefit of child tax credit and refundable additional child tax credit by way of your tax return, either as a refund if you're eligible to receive a refund, or if you have or if you're in a liability position in order to reduce any tax liability you may have to the government.
Mm.
So the advance payments that the government started to issue in around mid-July of 2021 is based on you having filed your 2020 tax returns or your 2019 tax return by around June of last year. And if you had your tax returns already filed in the system, and you were potentially looking at receiving, and in many cases, many taxpayers receive up to a maximum of 50% of any advanced or any child tax credit that they may be due on their 2021 tax return. So just to kind of restate or give a little bit more insight as to what's happening here, you're getting a refund, an advance of a credit that
Mm.
normally would have to wait to receive the benefit of on your tax return when it's actually filed for the current tax year in the subsequent year. So it's not going to be a benefit where you're going to be getting it now and getting it later.
Yeah,
So
yeah.
in the case of clients that have reached out to me as these payments started to roll out in July, depending on the scenario, based on that particular client's tax filing and the things that are going to be encompassed generally in their returns year over year, I advised them accordingly to ensure that they weren't going to be put in a position where we're having an uncomfortable conversation once I'm actually completing their taxes, and making them aware that those advance payments that they were willfully receiving in could potentially be it's going to potentially have a shortfall when I file their taxes. But thankfully, the majority of my client roster, I was able to give them the benefit of the approval to go ahead and not opt out of those payments, because you did also have that option to opt out of them if you didn't want to receive them. But the max, so basically, you could get 50% of that money up front, and if it was a situation where the client is still going to be in a refund position, I said go right ahead and take the money now, take care of your responsibilities now, as the government has afforded that to you.
Mm. Yeah, no, that's an interesting thing. I think I do remember seeing the option to opt out, and I potentially would have opted out if not for laziness. And so I think that's one of the things about, I guess, giving people the option to opt out. Some people may not opt out from the child tax credit, not because they're like, hey, I probably don't want to receive this now because I'm gonna probably have to pay at the end of the year, but
Right.
just because you have to take actual action to opt out. And it's interesting and kind of funny. I'm saying that as my channel is Urban Finance, and I focus on financial literacy. But we all get lazy sometimes. But it was good seeing those child tax credit come in throughout the year, and I honestly didn't spend any of it, so it really doesn't make a difference
Good.
if I have to give it back. And so another question that I have for you, stimulus checks, I don't really remember the last time we got the stimulus check, but how is that going to affect people's 2021 taxes, or receiving a stimulus check affect those taxes?
It will, but not from a standpoint of it being a taxable line item. It's not going to be reportable income, but there is a requirement for purposes of having the communication with your accountant, your CPA, your professional, your finance professional that does your taxes for you. There was a letter that was issued of a letter 6417. I'm sorry, the 6417 actually pertains to the child tax credit. Let me just go back to the child tax credit for a second.
Okay.
Please make sure that when your payments, if you were receiving the advance payments for child tax credit, there is a very important letter that the IRS has started issuing in the month of January. It's a letter 6419. Prior to them actually starting to release those advance payments, there was a letter 6417 that was in essence giving you a heads up of what was to come by way of the payments once they started issuing them in mid-July. The form that you need to wait for, the letter you need to wait for, is a 6419, because we have to ensure as tax professionals, as accountants, that we report the correct amount of advance credit received. Otherwise, you could potentially slow down the processing time of your return if the wrong information, if you misreport the credit, and as it relates to the child tax credit. So that takes care of that. So now I could jump back over to the question on the stimulus payments. Now, there have been three rollouts based on CARES Act, American Rescue Plan reforms due to COVID relief, where again benefits are being provided by the federal government to taxpayers in this country, in the U.S., where we're getting benefits of stimulus payments, and those stimulus payments are in essence free dollars based on you meeting the income requirements, having below the income thresholds. If you're a single filer, you have to be below, make $75,000 or less in your adjusted gross income. If you're also earning 112,500 up to 112,500 in earnings. If you're a married couple, then that threshold is 150,000. So as long as you're below those income requirements, all three layers, all three phases of the stimulus payments you were eligible to receive. The first two rounds of payments were impactful on your 2020 tax year returns that were filed in 2021. And those should have been reconciled. Either you received them while the government was starting to release them to the public or to the taxpayers in this country, or they were able to recoup any amounts that you did not receive by way of a direct payment from the IRS, either electronic or paper. You would then file your 2020 tax returns and get that benefit. Yeah, the third round of payments, which were issued somewhere around middle of last year, for those rollouts, the cap on third round payments was $1,400, meeting the eligible income requirements. Mm-hmm. And if you had not received your stimulus payments as of yet, as of today, or as of the point you're filing your taxes, there's a line item called the recovery rebate credit that's going to be captioned on your tax filing. And that's where you're going to be able to receive that benefit. That's where you're going to need to take advantage of making sure that you get those dollars that you had not received yet. Again, you have to make your tax accountant aware of the fact that you did or did not receive the funds. And if you did receive it, we also have to quantify how much you received, because if you didn't receive the full allotment of the $1,400 and you're eligible to receive it, again, the recovery rebate credit line item on the tax return on the 1040s, where you're going to be able to get those funds in your pocket.
Nice. So I guess, and not necessarily along those lines, but I think this is the big thing. For a few years, I think before I had my son, I had to pay taxes, and now, obviously, I don't think just my son is the reason, but certainly a huge help. I don't have to pay taxes. But what are some things that anyone can do to, I guess, lower their tax bill? What are some things that people can deduct? For example, home-based businesses. How does that work?
Okay.
Things of that nature.
Oh, absolutely. And that's been a major shift in the dynamic of how, many individuals have been able to, generate and earn income in order to continue to keep their households afloat. Again, because of this pandemic that's been long and ongoing. If you were unfortunately in a position where you have been laid off or furloughed from your job for an extended period of time, we had to find means for which to support ourselves and take care of our families. So home-based businesses have certainly gone through the roof. The great resignation period is something that's real. Either if you weren't laid off and you saw that at the end of the day, there are opportunities for you to maintain a household, pay your bills and also, get a better quality of life and spending more time with your family. A lot of independent entrepreneurs have been forged as a result of the pandemic. So while it's been a very down and depressing period in some respects, from a standpoint of business ownership and entrepreneurship, it's been really a renaissance of sorts, because a lot of people have taken that onus and started their businesses. And in the case of having a home-based practice, there are a lot of benefits afforded to, as far as a write-off that you can claim. Now, working as an employee, there were a lot of the independent deductions and in essence write-offs that were formally eligible. You were formally eligible to receive, prior to the administration that preceded President Biden. When President Trump was in office, there were some tax reforms that affected the ability for employees specifically to be able to write off and claim, generally as an itemized deduction, their out-of-pocket employee-related expenses or certain employee-related expenses. So tax reform kind of got rid of that and took a lot of those benefits away from the employees. Getting into self-employment, now you have a home-based business. Your expenses that you may write off could include, your home office deduction. If you have a space within your home, based on the total as a percentage of your total square footage for your home, your actual work space, your home office space, and it has to be you have to be very careful with this particular deduction in claiming it, because if you have any level of if you're utilizing your quote unquote home office and you're entertaining company, or you're having family come over to, you have a cot and they're sleeping as they spend the overnight hours, you're going to be walking that gray line that you don't want to have a potential inquiry from the IRS or even worse, an audit where they're looking at this line item and potentially questioning it. So you have to be very clean and you have to be very clean cut and clear about what your home office actually is and how you should be claiming it to make sure that you don't potentially have any issues from an audit standpoint. Now, also, I'm sorry, Gabe?
That makes a lot of sense. Yeah.
Yep. So if again, in the changing dynamic of the business world, home office deduction is going to be one that it's been on the uptick because of the fact that many businesses, many taxpayers have started their own home-based business. Depending on the type of business you have, all the general expenses would include like travel expenses, potential repairs and maintenance costs. Repairs and maintenance more so focused on your home office space. So anything that you're doing as it relates to your home, you have to make sure any deductions that you're claiming by way of home office or any repairs and maintenance, it is specific to the square footage area that is the home office. So if you have a 4-bedroom home and one of your bedrooms is outfitted fully as your home office, you cannot include as a part of that square footage to increase the deduction your son's bedroom area. Because at the end of the day, that's not a part of the home office. So that's why you should speak to and work with a qualified professional, especially for this deduction. It's one that is a very tricky one and could potentially trigger an audit very easily. So be aware of that. Now, other type of expenses, in the case of starting up a home-based business, whether you decided to register it as a business entity on structure of LLC, S Corp, C Corp, LLP, whatever the case may be, you may seek out the professional services of an accountant or an attorney to help you start the business, to go through the business formation process. So any fees that you pay for professional services are going to be tax deductible. If you had to incur travel expenses to go out and meet and acquire clients and meals and entertainment costs while in the process of trying to secure a new clientele, certainly business use, of your personal vehicle will also allow you to be able to calculate, and by way of 2 methodologies for the vehicle, either the standard mileage deduction or the actual expense method, you can claim a write-off for purposes of using your personal vehicle while in the construct of running a home-based business. Because again, while you're home-based, you may still need to go out and buy supplies at your local Office Depot or Office Max. So any costs that are incurred to purchase supplies or equipment or any materials needed in order to operate your home-based business are eligible tax write-offs. So in general, the lion's share, if not all of your out-of-pocket expenses when you're a self-employed individual and you're working out of a home-based business are going to be eligible for a tax write-off. So keeping track of all your receipts, supports, statements, any other supporting documentation will be key in order to provide to your accountant for your tax preparation.
Nice. And so kind of along those lines, If you're working from home, so a lot of people may not be like, I guess, like a business owner,
Yeah.
self-employed,
But
but are working from home
right.
because of the pandemic. Does that count under the home office? Can you count that home office? And if you are working from home and you don't have a home office, can you still write off certain aspects of electricity used for work expense or work-related items?
No, and I'll just say you have to. It's a very fine line. There have been a lot of reforms made by way of COVID relief, CARES Act, Rescue Plan, all those different things. But from a tax law standpoint, the benefits are really afforded to the independent, self-employed individuals. You
Mm,
can, again, you're going to be very. It's going to be a very cryptic thing, or not so much crypt. Sorry, not cryptic wouldn't be the right word. You have to make sure that you know what you're doing, and that's why I said
mm,
always secure the services of a professional. The benefits of those write-offs, again, a lot of the write-offs that were geared towards assisting employees,
mhm,
those went away in the last administration.
mm,
In our current, based on our current structure as far as the tax laws and the way that the system is currently operating, the benefits of the write-offs are really geared towards self-employed individuals. So independent contractors would be in that bucket as well. So either registered business or non-registered business employees generally not going to be able to claim these benefits. No,
okay, thanks for that. Thanks for that.
no
All
problem.
right. For anyone that is joining us now, I'm here with Oliver Brown, owner and founder of Brown Tax Preparation Financial Services, LLC. If you're joining us, if you have any questions at all about taxes, certainly let us know in the comment section. And, go ahead and smash the like button, whether you're on YouTube or Facebook, but that truly helps out with the algorithm and get this content out to more people. And so, Oliver, what are some things often overlooked that people can usually use to reduce their taxes? And this is for anyone.
Sure. Okay. So I guess some of the more commonly overlooked tax line items or deductions or adjustments that could potentially reduce your tax bill. And one that has certainly changed in terms of the structure, the ability to claim certain out-of-pocket charitable donations and contributions.
Mhm.
Specifically, there was a change in the the tax law that it started with your 2020 tax return filing, where the only historically the benefit that you'll be able to receive in order for you to receive the benefit of any charitable contributions or donations, and you certainly could understand this and based on the fact of your profession as a pastor, that you are eligible to claim those benefits when you itemize on your taxes. What that does that entail? Claiming itemized deductions on Schedule A that includes certain specific outlined expenses that the IRS has coded as and quantified as itemized deductions. Now, in
Mhm.
order for you to claim in years past, prior to your 2020 filing, in order for you to claim out-of-pocket expenses or out-of-pocket payments or contributions made to a religious organization, nonprofit, or a church, you would have to itemize.
Mhm.
With tax year 2020 came a change in the law, and this is one of those that you have to be aware of the change in the law, the tax law, because this could help reduce your liability. It's
Mhm.
going to be able to increase your standard deduction amount because now the IRS allows you to claim any cash charitable contributions and donations, even if you do not claim the itemized deduction. As
Wow.
a, so if you claim the standard deduction and it has a cap, the cap was at $300. So you could have an additional $300 benefit of a larger deduction, which works in conjunction with your standard deduction, and that is by way of any out-of-pocket contributions you make for a charitable organization or a religious organization or a nonprofit. So that's one that if you're not aware of the change in the law last year,
Mhm.
it's you would have lost that benefit. Um, Over the last, certainly again, all things affected by COVID. Since COVID started, payments that you would have made for student loans, meant generally, and for federal loans, this doesn't apply to private loans because many private lenders were still expecting you to make your payments for your student loans,
Mhm.
and as a result of the federal system, in essence, pausing and all of the loans that you have owed for student loan debt have been paused. You weren't making a payment, so any interest that you paid by way of any student loans that you were paying, that's an adjustment to your taxable income or your adjusted gross income that you have not had the benefit of. But if you have private loans, be aware that you should still be looking out for your Form 1098 as an Earl, which is going to report any student loan interest that you've paid to your lender in 2021. So again, the reason that's it could be a potential missed item is because we're all thinking student loans are paused, we don't have to pay them. But again, if you're paying private lenders, you have to make sure that you get the benefit of the interest that you paid on those loans in 2021. It's also same thing with a follow suit for 2020 based on when the pandemic started, that you don't lose that benefit to reduce your income to put you in a lower tax bracket and absolve you of some of the tax liability and the burden that you'll have. Mm-hmm. Now, this wasn't another one I could think of, which really wasn't really that prevalent, certainly during COVID time, but there's, if you moving expenses, the ability to claim certain moving expenses where taxpayers had the ability to deduct moving expenses starting in 2018. One of the main group of people that were still able to claim those expenses, the IRS, were generally military personnel. So if you're an active duty military member and you're relocating, you can still deduct those expenses. So make sure this is, again, focus more so on the military community. And I do have many members on my client roster that are actively serving. And if they're moving around, those deductions are that the payments that the expenses that they're incurring are eligible for purposes of a deduction on their taxes. So that's another uncommon one that you would find that would be able to reduce your bills. So,
and just to be sure, sorry to cut you off.
No,
for the charitable contributions up and
mm-hmm.
above the standard deduction,
mm-hmm.
is that only charitable? Those aren't just the churches, right? Or is it only cash contribution? Cash contributions only, right?
Cash. Well, you can deduct any non-cash donation of clothes, equipment, furniture, appliances, etc. But those items you have to claim the itemized deduction on in order to claim that benefit. Because of the fact over the last I forget what year, it was 18 or 19, but the IRS had increased the standard deductions across the board to much greater levels that made it more comparable for taxpayers in general across the country that were claiming itemized deductions before. Once they increased the levels of the standard deduction, many taxpayers were claiming standard deduction amounts. So if you're claiming the standard and you did have cash specific charitable contributions and donations, you can now couple them with your standard deduction. You didn't have the ability to do so prior to 2020's tax return filing.
Awesome. And so can you explain the difference between the standard deduction and the itemized deduction, and who may want to claim which one?
Sure. All right. So those two deductions are outlined, and they're pretty static. Not static in terms of the actual deductions, because the deductions change each tax year based on tax law, reform, inflation, a lot of different variables that go into play as far as the standard deduction. I'll speak to that one first. Your standard deduction is going to be based off your filing status that you claim on your tax return. And the IRS, based on tax law, will affirm exactly what your standard deduction amount will be for a given tax year. Your filing statuses that you have in play are you eligible to claim if you're a single person that's unmarried. If you're a married person, you could either file jointly or separately from your spouse. If you are an unmarried person, but you have a qualifying dependent to claim that meets the eligibility requirements of being a dependent, then you could claim head of household. And lastly, if you're a qualifying widower, you have the ability to claim a standard deduction as outlined by the IRS for a given tax year. And the other side of the coin will be your itemized deduction. So I'll tell you that at the end of the day, once the dust settles and you figure out the total of both your standard and your itemized, where you'll round out which deduction to choose. So in the case of the itemized deduction, I've already spoken to the charitable contributions and donations in a previous answer. That's an itemized deduction. So that includes, again, in the case of if you're itemizing, you get the benefit of any cash and non-cash itemized deductions to report on Schedule A for your taxes. If you have out-of-pocket medical and dental expenses paid that you are not reimbursed by an insurance company, an employer, or any other source, they have to meet a certain dollar percentage threshold of your adjusted gross income for a given tax year. In the case of 2021, I believe it's still 10%. 10% of your AGI is going to be a calculated amount based on your income, doing the math. That will be your threshold marker as far as the minimum amount of out-of-pocket medical and dental expenses you have in order to afford to qualify as a itemized deduction. So if you do the percentage allocation of your AGI and say you come up with a calculated amount of $10,000, but so that's your threshold, but you had out-of-pocket medical and dental expenses. And in the case of, again, COVID time, if unfortunately you were hospitalized because of COVID, or if had any major surgeries or anything along those lines, those bills can be very significant. Say your total out-of-pocket medical and dental expenses paid was $15,000 for the year. Mm-hmm. The benefit of the itemized deduction that you're going to be able to report on your tax return or receive the benefit of will be the difference between the minimum calculated amount and your total expense. So in the case of the itemized deduction scenario I just gave, you would get a benefit of $5,000 of out-of-pocket medical and dental expenses to claim as an itemized deduction once that calculation is completed. If you live in a state that you're subject to paying state taxes and you have state taxes withheld from your paychecks, that is another itemized deduction that also has a cap based on your state income tax level requirements. In addition, one of the biggest ones, the more primary one, mm-hmm. and the one that I would say would be generally is the biggest one that you will look at is if you own your home, if you own your primary residence, or if you have a secondary or third mortgage, your mortgage interest, your real estate taxes paid, if you happen to have PMI, which is private mortgage insurance, on your mortgage loan, and if you happen to have paid points on your mortgage, simply meaning if you pay points in when you're trying to reduce your interest rate for your loan. So those four pieces will be reported on a 1098 mortgage interest statement. And again, that's also another qualified itemized deduction. Another fairly common one, but it hasn't been so much the last 2 or 3 years, thankfully, because of the changing climate and the dynamic of the Mother Nature and the things that has been doing. Casualty theft losses, and what that entails is if you have significant loss by way of a major catastrophic event, i.e. a fire, a flood, a earthquake, a hurricane, something where you sustain major significant damages by way of a major catastrophic event, that's another itemized deduction. And there are a few other smaller ones, but those would be the main ones that you would generally see reported. You have all those itemized deduction items, they are aggregated, you come up with a total. Based on your filing status, you will end up verifying based on that tax year what your itemized deduction total is based on your your standard deduction amount is based on your filing status. Whichever of those two deductions is the larger amount or the bigger deduction, that is the one that will be most beneficial to claim, because that larger deduction is going to help reduce your adjusted gross income, making your taxable income lower, which consequently will have you paying less in federal taxes because your tax bracket will be lower. And hopefully once all that, any credits or any other refundable dollars are accounted for in your tax return, then you'll end up receiving a larger refund.
And so there are several questions from Christina. And so the fire round questions. If you get a scholarship or a stipend in school, is that considered taxable income?
No, it's not. Your Form 1098-T, your tuition statement, will from your educational institution that you're attending, will have it recorded and reported in a specific box. I won't go into the details of the 1098-T, but based on the box and the information as it's reported on your 1098-T, your accountant or your tax professional will be able to make sure that it's not a tax item as it relates to it's not going to be a detriment to you. You don't have to pay any taxes on it, quote unquote.
Awesome. Like to hear that. And as a married couple, when is it better to file separately or jointly?
All right. I'll give you a scenario in the case of 9 times out of 10, it's always going to be more beneficial to file jointly as opposed to separately. There are certain credits and adjustments that you're not allowed to take. If you're in a certain income threshold or bracket where you're eligible to receive refundable dollars by way of earned income credit, and certain other credits related to the dependent care costs, a calculated credit for that amount. If you're filing separately, you will not have the benefit of those particular credits. You're restricted from claiming them. So 9 times out of 10, it's always going to be more beneficial to file jointly as opposed to separately.
Okay. And are you able to itemize medical expenses that you use an HSA to pay for?
No. So in the case of an HSA, those are in essence pre-tax dollars that you're contributing into a set brokerage account, not a brokerage account, but it's an administrator will be the hub for which you're having your HSA contributions sent in and paid and put into that account. So the way you'll be receiving two forms that will be specific to your HSA that you have. Form 1099 SA, which the 1099 SA reports any distributions that you have from your HSA account, which is a health savings account for those who are not familiar with the HSA or what it means. It's a health savings account. It's a pre-tax benefit that you can receive to not pay taxes on the amounts that you withhold from your paycheck in order to pay for qualified medical expenses. So if you're contributing into your HSA, it comes out of your paycheck as an employee, goes into the account, and then when you go to pay for qualified medical expenses, you'll generally have a card or if you don't have a card from the administrator, you may pay for the expense out of pocket and then file for a reimbursement. So the funds come out of the account or a disbursement is made from the HSA during a given tax year, you're going to receive a Form 1099 SA from the administrator. So you can account for it potentially it has to be accounted for because that adjustment line item, which reduces your total income before it gets to adjusted gross income line item. You could potentially, based on the scenario, have a portion of your HSA contributions. And again, I don't want to get too deep into the granular details, but certain components of your HSA dollars could be subject to being reportable income and you have to pay taxes on it. Now, the other form is a Form 5498 SA, and that reports the market value of your HSA that you have with that administrator, generally at year end. So again, what was I hope I answered the full question on the HSA. Just go back to it again.
Yeah.
So are you able to use are you able to itemize medical expenses that you use at HSA? So for purposes of claiming the write-off as an itemized deduction for your medical expenses and any dental, you're already getting a pre-tax benefit for the HSA. So the benefit of the itemized deduction is you're not going to be utilizing those dollars that you're using dumping into the HSA. It doesn't impact your itemized deduction schedule. Those are raw dollars or after tax dollars that you paid out of pocket. That's what's going to qualify as the itemized deduction.
Okay, it's kind of like the child tax credit, right? It's already being accounted for per se, kind of.
Right. You can't get the benefit on both sides because that adjustment could reduce your income. And then you can't then take that same benefit and apply it to the itemized deduction schedule, another benefit.
That would be nice, but Uncle Sam loved taxes too much.
Yeah.
So we have a question from Brother Man. He said, I got a couple small lottery winnings. Kudos to you, Brother Man, on your winnings.
Right.
What's the deal on those?
All right. So for purposes of, and you wonder why I'm wiping my head, thankfully, it's February 3rd. I'm in the state of Florida, so it's 80-something degrees. And I should have turned on my AC. That's a personal issue.
That's a blessing right there.
Sorry for the folks that are in the Northeast.
I know, right? We had today was a hot day at 40 for us. Temperature's 40? Been like around 7 and 8 and.
Yeah, my apologies. I didn't mean to gloat, but you could do like I did. You can move further south to the warm climate. So in response to the question regarding the lottery winnings, you're going to be receiving generally. You'll receive once you've completed the necessary paperwork by way of your lottery winnings. Whether it's generally I see a lot of these when you have clients that go, they try to get some winnings at the casino. You'll get a Form 1099-G that reports your in essence your windfall by way of any lottery winnings that you have. That is reportable income. So you have to account for it once you get those 1099s and report it as income. Now you have the benefit to leverage the gambling winnings by way of you can actually write off up and in essence zero out your windfall by way of any gambling winnings up to the extent that you have losses that are comparable. So if you had total gambling winnings of $15,000 for the year and you had losses of $17,000 for the year, you can in essence wipe out the ability, the exposure that you have for the income by way of offsetting it by the loss. You don't get the benefit of going over the amounts that you win. So if you won 15 and you lost 17, you don't get to take a $2,000 loss. But if you won 15 and you had 17, you could wipe out the tax burden that you would have for the $15,000 in additional income reported on the 1099.
Uncle Sam don't play no games. I kind of feel like that's a little bit of cheating, saying that hey, if you win, you're gonna owe us, but if you lose, you can only owe. We're only gonna write off up to the point where it balances it off.
Right. Be conscious of that as you're you're going to run the slot machines. You could only get that benefit up to basically a zero-sum game.
And so you have to kind of. So I mean, I don't play the slots or anything, so I don't know how it works, but
yeah.
I'm assuming the casino tracks all of that. What about the lottery lotto tickets like you're buying from the corner store? No one is tracking or
it will in essence be the same rule of thumb. You could potentially if you have any major windfalls, again, you could offset up to the amount of your losses. And again, this is once you win. If you have a significant win, if you go and it's just let's say a $5 scratch off, you're not going to get like a 1099 in the mail. So in essence, it's you're
saving your receipts from your lotto tickets.
Yeah, you got.
I purchased $500 in tickets over the last year, and I only won $400. So write it off.
Right, up to the 400, and again, it's just going to be if you go to the casino, they're going to actually, if you have winnings, they're going to get your information, so they're going to have your name, your address, social. They're going to ask for that detail so they could meet they have a mandatory requirement for purposes of reporting to the IRS if you have won dollars, that especially if they're significant winnings. So, but when you go to your supermarket, buy tickets at the local grocery store, the responsibility then falls on you to make sure you keep track of all that support. Because again, if the 3-letter folks ever come knocking, you can't tell them I threw them out. You got to make sure.
No, I hear you there. Brother Man said he is impressed. I'm sure he's impressed of your knowledge of everything. I mean, he's been saying he's impressed with your knowledge, but especially your ability to know how to best work the lottery system and the casino system.
Yes, sir.
So I personally, I have a lot of small income streams, right? So from ads and different things. So for example, Google ads or Amazon partnerships, Patreon, Cash App, all of these things, bring in small incomes here and there. Is there any amount of income that you don't actually have to report? So say like you get $10 on Patreon. Do you have to report that?
The correct answer is yes, and the short answer and the IRS answer is yes. Every single dollar of reportable income that you earn, in the case of your platforms, you're operating a business. So all of those proceeds by way of any income that you receive is supposed to be reported down to the penny. So as it relates to the requirements for an entity paying you, there's a threshold, generally $600. Once you have been paid for services rendered over $600, a 1099 NEC, which is a non-employee compensation form, could be issued. It was formerly a 1099 MISC, which is miscellaneous income. So if you get the tax document, by definition, that document, the 1099 you receive, and if you have merchant services where you're getting payments by way of credit card or other platforms, it's a 1099K. So if you're getting those tax documents issued to you, they're also being issued to the Internal Revenue Service. So make sure that you get all your documentation, all your support, report your income accordingly. If you fall below the threshold requirements for you to be issued a 1099 as an independent contractor, as a sole proprietor, operating a DBA, again, you still are required to report that's $10.50 in income that you earned by way of doing your business. And again, the ability to claim the write-offs to offset some portion of that burden is really the key thing. So report all your income, because if you ever get audited, and in the case of your checks and balances, especially if you're operating a business, you need to register your business accordingly. Make sure it is on record as a certified registered business, and also having a business bank account open to in order to process any receipts of income and any expenditures. So keep your personal details separate from your business, keep a clean book of record, and you won't have to worry about any issues as far as audit flags or any concerns, because you'll have a clean paper trail in order to follow that cycle.
Yeah. And so do you have to open a business bank account, like it has to be a business, or can you use a regular checking account but totally for business purposes?
You
Like,
could
what are your thoughts and recommendations on
Right.
this?
In order for you to actually open an official business account, for most banks, if not all financial institutions, they're going to require that you be formally registered. So you have to submit the articles of incorporation or organization to your relevant Department of State in your where you're conducting business, and then following suit on securing a tax ID number. And there are other certain requirements by way of either the local level, where you may have certain licenses that you need to attain, whether it's a situation where you're a home-based business or you have a brick and mortar. So following that process of, again, getting officially registered and certified is key. Once you have those particular line items earmarked and your business is on record and it meets those requirements, now you can go to your local bank or credit union and in order to open up a business account. But you're not going to be able to open a business account without following certain processes before doing so. But if you're a DBA, you're just simply operating your business under the umbrella of your name, in essence, or under a nickname or a moniker. You can open up a separate checking account that would be technically a personal checking account, but as long as you keep it solely focused on transacting anything related to your business, then that's going to be allowed. There will be no excuses for running your business through your personal checking account that you're running and paying your household bills out of. So you have to make sure keep those two things separated. The best course of action if you're running a business is to register and go through the mechanics of doing so. That will keep you from any potential subjective analysis by the IRS as it relates to any expenses that you may have, because that's where you're going to get into that gray area that you want to fall into, where these expenses may truly be business related expenses, but because you're running through your personal account, it could be.
Yeah, I think I remember something about Young Buck trying to write off his diamond watches as business expenses because he needed it for the image he was trying to upload, but the judge was like, "Nah, you just avoid taxes."
Not gonna work. Yeah, so and especially when those are very extravagant, line up, they have high dollar value in terms of the write-off benefit.
Yeah.
You're gonna make it's gonna be a tough argument to try to sell the government that this is really truly necessary expense in order for you to operate your quote unquote business. So the bigger the dollars get is the more subjectivity it gives the IRS to say, you know what, I don't think so.
We want our taxes. Thank you very much. So Christina asked, so even if I tutor someone here and there, would you still recommend opening a business account? And now I know for the purpose of kind of like DBA, like this tutoring here and there, we're talking about more of a personal checking account under your name out specific to that operation. So say like I tutor someone once every 3 months or something like that. Should I get that in a separate checking account allocated just for tutoring services?
Now I'm very keen on the words that the words of affirmation. Now you're saying I'm doing this here and there, kind of like sporadically, every now and again. Again, if the IRS hearing this type of language, it gives them cause for concern. So we're not going to be teetering on the lines of, is this truly an official business?
No, it's not in a business.
Or
right?
Is it a hobby?
It's just a hobby that someone makes money from. And so do we have to open a checking account from a hobby?
No. So for purposes of a hobby, you will not get any benefit of any write-offs as it relates to any activity there.
Not for write-off purposes.
Very clear.
A
hobby would not qualify, no. Okay. If you're running and operating a tutoring business, yes. But for a hobby, no.
Okay, cool. That's good to know. And
Yes.
so, what are some changes in the tax? No, no. What's some changes in the tax rules that people should be mindful of as
Mhm.
they're, I guess, filing their taxes this year? And Christina did mention the Cash App thing. So if you could
Oh,
speak to that Cash App, Venmo, and all of them having to, um,
definitely.
yeah.
That is definitely one of the hot topics. As far as the reporting requirements for these payment platforms that receive payments for individuals, taxpayers, etc. Specifically, the three key ones are Cash App, Venmo, PayPal. Now, if you're running and operating a business, these platforms, especially if you have commercial grade accounts, these platforms now have a mandatory reporting requirement once you have transactions in excess of $600 in the same manner as if you're an independent contractor working and providing services for an entity, they have to issue you a 1099. Well,
Mm,
now Cash App, Venmo, and PayPal are required to report to the Internal Revenue Service transactional activity that you may have in excess of $600 or more. So you're not going to have a tax document being issued to the federal government. That you are also going to be receiving some level of tax forms and notifications, and you're expected to file and claim that information. The reason that has now become a hot topic, and why the requirements of reporting have changed for these platforms is the fact that people were receiving funds through these accounts and not reporting them because there weren't the IRS wasn't being told by these entities, by these
yeah,
different
yeah,
platforms. And of course, people do what they do. You
yeah.
know, so, so now there is no hiding anything. You have to be conscious and aware that as you do your transacting business, specifically if you're doing commercial business. Now, the other very popular one that I'm not sure if you mentioned it, but Zelle.
Mm,
Zelle is a payment platform where you could process payments, process and submit funds electronically. That does not apply to Zelle. So
mm.
that's one thing that a couple of my clients have reached
That's
out to inquire
interesting.
about. Yep. So Zelle, if you send payments, and I use Zelle pretty frequently, I send funds to my kids, or if I'm sending something to my wife, that's not going to be a tax relevant item. There's not going to be a 1099 issued. There's no reporting requirement for Zelle as a payment platform or electronic transfer platform to report to the IRS. But Cash App recipients, Venmo, PayPal, beware.
Mm,
So that's one major thing. Another one, again, we touched on it earlier, having to do with the child tax credit reform and the American Rescue Plan. For 2020 tax year, now rolling into 2021, the levels for which you receive the benefit of child tax credit, the benefit as long as the child was 17 years of age or younger, the cap on that credit based on certain income thresholds being met was $2,000. Now, starting with the 2021 tax return filing that we're going to be producing currently, as I'm working on them right now, if your child is age if your child is age six, under the age of 6, you could from birth up to the age of 6, you could get $3,600 for
mm,
this tax year filing. So that's an extreme increase in that benefit that you could receive
mm.
if your child is under seven or more, 7 but under the age of 17. Within that range, the benefit is $3,000. So at a minimum, you're looking at $1,000 increase in the benefit that you're going to receive by way of child tax credit, and it could be as much as $1,600. So in the case of a child that's under the age of 6.
Okay,
So those are the two. So
nice.
those are the ones I was keying on.
And so, I was like thinking in advance. So, as someone is thinking of 2022 taxes, what are some things they should be thinking about or even planning to do in order to reduce their taxes for the next year? Is there any like common strategies?
Right. Well, tax planning is certainly a big part of what I provide, service I offer to my clients, and specifically, especially if you're on the side of a self-employment and you're working as an entrepreneur, scaling your streams and sources of income that you receive is depending on different types of income is going to be taxed at a different rate, or subject to certain parameters by way of taxation. So looking at options like maybe contributing to a IRA, where you could get the benefit of contributed amounts into an IRA, could give you a benefit of reducing your adjusted gross income, reducing your tax liability. Again, any costs that you may incur while in the process of running and conducting an independent business, which again, if you're running a business and you say you did a business as a DBA in 2021, why not looking to maybe, why not looking to, I would recommend, especially if it's your primary source of income, registering your business with the Department of State. Those fees, it gives you first and foremost, the peace of mind knowing that under the construct of you running and operating a business, you don't have any potential issues by way of legalities. In the world that we live in, lawsuits are very prevalent. You do things in business, you don't want to have them having an impact directly on your household, and your family members. So you could potentially look at exposing yourself to a lawsuit where your personal assets could be up for seizure, or your home, your vehicle, etc. Your bank, your literal physical bank accounts, in order to be able to pay restitution or anything along those lines. So registering your business will give you the ability to cover your assets, separate your business affairs from your personal. And again, any write-offs that you have by way of registering, Department of State fees, licensing fees on a state or local level, the registered, any costs relative to securing people, services of professionals to help you get the business in order, keep, either create the business, and certainly if you have contract labor or anything like that, any of those costs, those are tax benefits. So really laying out a foundation, and especially for those that have, varying degrees of different types of income. A lot of taxpayers have been doing a lot more transactions now that they've been home, where they're doing, what do you call that? Brokerage related activity, stock sales transactions, virtual currency, blockchain. Those could have a potential capital gains effect. So as you're moving and buying these assets and processing sales, be aware, especially if you're doing short-term transactions, short-term trades, meaning sales where you're owning the stock, the equity, the commodity for less than a year. You could be looking at some significant tax liability by way of capital gains taxes that you have to pay. Similar situation, not very common, but have clients that are looking at maybe potentially buying properties, but selling properties that are using for purposes of business or investment. And you could have some significant capital gains exposure, again, by way of selling real estate that you're using for investment or business purposes. The gains could be very high right now because the market for real estate is extremely high. So I'm having counsel sessions with clients where they're selling an asset, they're looking to potentially take advantage of a 1031 exchange. And that 1031 exchange, the 1031 exchange process allows for real estate investors that have real estate assets that are being sold, that are being used for business purposes. You can, within the allotted time, the allotted parameters of completing the 1031, you could absolve yourself of, we're talking potentially 30-40% and tax liability and exposure you'll have for purposes of real estate sales where you have gains because property values are high, so sale prices are high in comparison to what you may have initially paid for property, adjusted by any capital improvements that you had. So there are a lot of different things that could get, again, very detailed depending on the scenario and the client, that you could put certain things in measure. Let's speak on a more common ground. W-2 wages, if you're still working a job, and your income based on number of dependents that you have, write-offs that you may claim on Schedule A, itemized deduction schedule. If you're doing a job and you're operating a business where you have a significant outlay of expenses and write-offs that you're eligible to claim by way of your business, that could potentially be used to offset any wage-related tax liability that you have. So you can make some adjustments to your W-4 at your job to reduce your amount of federal taxes you have withheld from your paychecks. So you're getting more of your dollars in your hand and you keeping it in your pocket to pay for household expenses, potentially looking at maybe investing it so your money could make you money. That's why, and then you could use the mechanism of a business, a true official business, not a hobby, to write off the expenses to reduce the tax burden. So those are some of the things that I'll say will be good things to kind of tag in on.
Awesome. Thank you for sharing that. And so I would just say, let the folks know Oliver is my accountant for transparency sakes. He does do great work for me. And so if someone is looking for someone, whether accountant, whether someone to do their taxes, all of the list of services that you provide, can you tell the folks what you do again from a service perspective, as there are people on that may not have been on earlier, and how
Sure.
they can contact you if they wanted to reach out to you.
Okay, sure, no problem. So, for purposes of services that I offer through my firm, again, the name of the firm is Brown Tax Preparation and Financial Services LLC. We offer accounting, bookkeeping, business formation, credit repair. I even do bankruptcy filing assistance, help with an assistance with filing quick claim deeds, financial planning and advisory, and tax planning, investment training, and that kind of revolves in the world of educating you on investments in either individual stocks and securities, commodities, virtual currency, Bitcoin, blockchain, that whole world. And payroll services are another service that I offer to my clients that have independent businesses. And for as taxation, it covers the spectrum of personal taxes, business taxes, estates, trusts, and I also handle foreign and international tax clients as well. Military veterans that are deployed overseas, there are a lot of unique rules that come with how they're taxed. Or if you're a client that I have also have clients that have businesses that are in different parts of the world, that again, tax law on an international scale is different than the tax law and the requirements here in the United States. So I have a great depth and knowledge of experience based on my 25 years in the field. And I'm certain to be able to assist most, if not all, taxpayers in terms of the situations that they may have. And even if it's a situation where it's something I may have not come across over the last 25 years, I self-educate. I love learning. So that's something that's allowed me to be able to have such so many different streams of services that I can now offer to the public. And for purposes of contacting me, you can reach me by means of primarily my website. My company website is www.btfllc.com. That's Brown Tax Financial LLC.com for the website. You can also reach me by way of my telephone number for the business, which is 772-873-7600. I can also be found on various social media platforms, primarily Facebook and Instagram. I have a business page that you can search and like on Facebook, which is Brown Tax Preparation and Financial Services LLC, is where you'll find me on Facebook. And on Instagram, my handle on Instagram is at OBROWNBTF. That is at OBrownBTF. So those would be the various means for which you'd be able to contact me.
Awesome, awesome. Thanks again, Oliver, for doing this interview and sharing your wealth of knowledge. I appreciate it. And thank you to everyone that is out there as well, joining us live and that has been with us from the entirety or different parts. Thank you for everyone that asked the question. We couldn't do without you. And so we greatly appreciate your support. And so I will be leaving Oliver's information in the descriptions. So you can certainly check that out if you would like to contact him. And like I always say, God bless you and remember to live your best life.